In today's video, I'm going to be talking about a very interesting ETF that I haven't actually spoke about on this channel for well over a year, and it seems like it may be a good time to potentially buy a couple of shares. I'm not saying go all in, but it is kind of an interesting ETF. We're talking about weed stocks and weed ETFs, but this one is really interesting, and there's many different reasons why I'm saying that this could be interesting to buy right now. So first off, the ticker symbol is HMMJ. It's currently trading around $5.90 per share, and it is up today. And the most interesting thing about this ETF is the fact that it actually has a dividend. This is very interesting because, of course, as we all know, 99.9% of all weed stocks do not pay a dividend. So how are they able to pay 1.7%? Now, I'm going to tell you right now that it says that it's 1.7% right now, but this ETF has been as high as 7%, 5%, 0.5%. It's all over the place. Now, why is this, and how do they even pay this dividend? Well, actually, it's kind of an interesting way. So what they basically do is they'll hold stocks. For example, they'll hold CGC, which is Canopy Growth Corp, and they'll hold that stock. But how are they going to make money off of that stock? Well, they actually loan out that stock to short sellers who want to short sell that stock. That way, they can actually make an income from those stocks that people are short selling. So while they are loaning out these stocks because people are speculating that the stocks are going to go down in price, they're actually still making money while the stocks are going down in price. Kind of an interesting way of making money. And right now it's at 1.7%, but again, it does fluctuate. Generally speaking, from what I've seen, their dividend goes higher when the stock price goes higher, mainly because, of course, anytime the stocks are increasing in value, people are going to say that they're going to crash. And when people are saying that they're going to crash, they want to short sell to try to make money off of that crash, in which case, guess what? We make money either way, and they lose their shorts usually, as we've seen with GameStop. The volume is also pretty good at 150,000 shares traded every single day. And the MER is actually quite high at 0.85%, mainly because, of course, they are loaning out the shares to short sell, which means that they are probably putting in a good amount of work of actual man hours, which is why they charge such a high MER. Keep in mind that weed stocks are not exactly the most consistent earners or the most consistent gainers on the stock market, as we've seen with this chart alone. Many weed stocks did have a W right there. However, that double bottom, even though this one was kind of messy over here, usually means that those weed stocks would have accelerated to the upside. Most weed stocks had actually a triple top, which generally means some pretty hard times coming up. So this could have been translated many different ways depending on the stocks that you were looking at. And of course here, what we did see was, of course, the GameStop trade happening right there. And of course, the weed stocks were part of that big GameStop trade. And since then, they have had a pretty steady decline to the point of just absolute chaos. However, why am I actually mentioning this? Well, actually, there's a reason for this. And the reason is that's a pretty narrow section right there. It's starting to level out, and of course, it could be crossing that point very soon. Some analysts I've seen online have even said that this could be a downwards flag, where if it breaks above, could mean massive upside. However, I'm not saying that this is going to be a massive gainer right now. What I'm saying is that there's a lot of legal stuff that's currently happening in the States, which could be very good for these stocks. That's why I'm actually looking at this ETF right now once again. Because, as we know, February and March, the American government, apparently, according to BNN this morning, is actually starting to look at weed companies to make it more legalized, maybe broader, maybe at the federal level, which would then open up a lot more states to be able to legalize it as well. And as we've seen here in Canada, and of course even in the United States, this could really actually push the stock prices of these companies to insane levels. As we've seen with companies like CGC, Canopy Growth Corp, which is a company that I owned many shares in, and I almost pretty much day traded it, was amazing. I actually made a good amount of money doing almost basically day trading of CGC because I was buying it at $2 one day, and it literally the next day jumped over the 2-day period to $5 a share. I would sell everything I had because the next day it would be down to $3, and then it would be up to $7 2 or 3 days later, and it would be back down to $3, and it would kind of hover there for a little while, and then it jumped one day from like $3.50 to $12. And I was at work because I used to work a job. And at that point, I was like, oh my God, I gotta sell this. And I did. I got it at like $10 sold, and I made like 3x my money. It was fantastic. It was a fantastic day at work because I only did day trading. It was a very slow day at work. But either way, it was a fantastic time to day trade these stocks. Would I do it again? No, I've learned my lesson. I should have just sold half and kept half of them because it eventually went to $60 a share. So because of that, if I actually just kept on buying, if every time it dropped to like $2, $3, $4 a share, if I kept on buying a couple of thousand shares and it popped like it did to $60, imagine if I had all those shares and sold half of them, or maybe 3/4 of them, or maybe all of them. I probably wouldn't have done all of them. But if I still had those shares and I sold them at $50, $40, $50, $60, that would have been a ridiculous return because I actually never ended up basically selling after the point of $40. I bought a few at $20 a share, sold them at just over $40, and I sold all of them. And now the stock is currently worth like it's like $11 or $12 a share. So it could be time to buy that one again. Who knows? But this ETF actually holds those companies. As we can see here, its biggest holding is Tilray. That's an interesting company. I do own a couple of shares of that. Canopy Growth, I do not own any shares of anymore, but that is the exact same company that I was just talking about. They now have the ticker WEED in Canada, or CGC in the States. And then there's other very interesting stocks. For example, Jazz Pharmaceuticals is actually kind of interesting overall. And of course, Scott's Miracle-Gro, which is just, I would love to say it's a great meme for this ETF, mainly because Scott's Miracle-Gro is a fertilizer company, which you're going to need fertilizer for weed to grow, because of course it's a plant. So from there, it's just funny in my opinion, and of course you may get a good laugh out of it as well. But overall, these are the dividends that they've paid out recently, and of course, as we've seen, when the stock was doing really well, it was actually doing quite well when the dividend was going, and of course at that time the dividend was close to 4, 5, 6%, and it was doing extremely well. Now it's getting like 2 cents a share for the dividend, and it's not doing so great. As we can see, it didn't exactly pay a dividend recently either. So from there, it's kind of interesting, and I would just say it would be an interesting ETF to potentially maybe speculate with. This is one of those ETFs that I would not be dumping a lot of my money into, and this is also an ETF that I would not be basically going all in on. This is an ETF where if you had a couple of $1,000s sitting on the side and you said, I feel like going to the casino, this would be probably a better choice than going to the casino. First off, in Ontario, you can't go to a casino, so you might as well gamble somehow, and this seems like a fantastic way to gamble a lot of your money away. And you probably won't lose 100% of it like you would at the casino anyways. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.